Canada, by the way, imposes a 250 to 300% tariff on many of our dairy products. They have 270% tariffs.
Breaking news is shaking the global energy market, and the White House. Canada, once America's closest oil ally, has made a shocking pivot. With $104 billion worth of oil heading to China, former President Donald Trump is furious, and Americans are already feeling the pain at the pump. Gas prices are rising, energy supply chains are collapsing, and the US economy is bracing for impact. So what led to this seismic shift? And why is the US being left in the dust while China and Canada get richer? Let's break it all down. For decades, the US counted on Canada as its top oil supplier, with nearly 60% of US crude imports flowing from our neighbor to the north, but that era may be over. In a stunning move, Canada has signed new long-term oil contracts with China and India worth over $104 billion. These deals include guaranteed daily shipments of 325,000 barrels for the next 15 years. Not only is China paying more, but they're asking fewer questions. What changed? It's the Trans Mountain Pipeline. After years of delays, protests, and lawsuits, the expansion project is finally live. Canada now has direct access to Pacific ports, meaning it no longer needs to ship oil through the United States. With the expanded capacity of nearly 890,000 barrels per day, Canada has flipped the script. They can send oil straight to China's refineries without touching American soil. And the effects immediate. The US lost over 11 million barrels of oil supply in just 3 weeks, triggering price spikes from coast to coast. In California, gas hit $5.25 a gallon. Refineries are running at just 71% capacity. American drivers and families are the first victims. Some gas stations in the Midwest have already begun rationing fuel. Others are raising prices every 48 hours. This isn't just a price hike, it's an energy emergency. China is locking in its energy future, securing long-term contracts at competitive rates. Chinese tankers are now docking regularly at Canadian terminals, creating a new supply route that bypasses the United States altogether. Former President Donald Trump didn't hold back. In a fiery statement, he accused the Biden administration of surrendering American energy leadership and called Canada's move a direct economic assault on the US. Trump's outrage wasn't just rhetoric. He's calling for 25% tariffs on Canadian vehicle imports, demanding immediate sanctions, and proposing to cancel existing trade agreements unless Canada returns to the negotiating table. Canada, however, is not backing down. Officials say they're diversifying exports and responding to global demand. "We're not turning our back on America, we're turning toward opportunity," said one Canadian trade minister. Meanwhile, US industries are buckling under the pressure. Steel mills in Michigan are paying 20% more for raw materials. Grocery prices are surging, air travel is threatened by rising jet fuel costs. Some economists are calling it a slow-motion economic crash. And it's not just oil. Canada recently imposed up to 300% tariffs on US dairy products. Trump fired back by threatening massive auto tariffs on Canadian car imports, which could disrupt hundreds of thousands of jobs in both countries. But here's the twist: those dairy tariffs? They only apply above certain quotas, which the US rarely exceeds. So while technically true, the outrage may be more political than practical. What we're seeing now is the beginning of a trade war sparked by oil, fueled by political agendas, and threatening to spin out of control. While the US scrambles, Canada and China are building something bigger, a new energy alliance that could reshape the 21st century power structure. With Europe still reeling from the loss of Russian energy, and BRICS nations moving away from the US dollar, the global energy stage is shifting rapidly. Canada is now seen as a key partner for energy-hungry nations cleaner than Russia, more stable than the Middle East, and less restricted than the US bureaucracy. The US faces rolling blackouts. Hydroelectric dams in the West are running dry. Coal plant closures are ahead of schedule, and solar and wind infrastructure can't scale fast enough to keep up with peak demand. And don't forget politics. Canada recently froze $43 million in EV subsidies to Tesla, accusing Elon Musk of manipulating tax credit systems. That decision came just days after Trump imposed new tariffs. Coincidence or coordinated retaliation? As supply chains fracture and alliances shift, the world is watching. American companies are now lobbying Congress to restore Canadian energy trade. But many wonder if it's already too late. In this new reality, Canada is no longer the quiet junior partner. It's calling the shots and America is feeling the shockwaves. So what comes next? Will the US retaliate with more sanctions? Will BRICS nations rise as a new energy superpower? Or is this simply the dawn of a post-American oil world? One thing's clear, Trump's eruption isn't just political theater, it's a warning. The global energy chessboard is shifting and the US may be running out of moves. Don't forget to like, comment, and subscribe for more breaking geopolitical deep dives. What do you think? Has America lost its grip on the energy game? Are Canada and China forming a new axis of power? Drop your thoughts below.